Is there a threat of a commercial real estate market crash? More than 50% of the $2.9 trillion in commercial mortgages will need to be refinanced in the next 24 months. So what's really going to happen? Hi, I'm Candy Valentino, and for the last 25 years, I've been building businesses and generating wealth, starting my first business when I was just 19. Since then, I've gone on to build, scale, acquire, and exit businesses, all while investing in real estate and building financial freedom. Now it's all about you and why we're bringing you the real story behind building businesses and generating wealth here at The Candy Valentino Show. Hey guys, welcome back to the show. It's so good having you here with me today, and thank you for being here. I hope you're well. I hope that you and your family are healthy and happy, and you're enjoying this last quarter of the year. Before we dive into the topic that I've prepared, I want to just take a second before we jump into this third part of our real estate series, because for some people, or I should say for most people I know, the last quarter of the year is some of the most stressful times. And as a business owner, you're trying to hit all of those goals. You're trying to crush last year's numbers. You're finding out how much you owe in taxes. You're reflecting back on where did this year even go, seeing how much you did, but maybe also feeling like you're still so far away from where you want to truly be. And then when you throw in Thanksgiving and Christmas and the busyness and expense of the entire season, before we know it, we are planning next year's resolutions and next year's goals. New year, new you. I've been there. And from time to time, quite honestly, I feel like I'm still there. Because here's the thing. Achieving and growing is good. Ambition and aspiration are good. They are undoubtedly essential for your personal growth and achievement. But there is so much research now that shows that there are people who have an obsession with achievement, even a level of addiction. And those studies also show that this addiction can be detrimental to our overall well-being and even our long-term success. Now, that might seem like a very odd thing for me to say, since here we are every week focusing on building businesses and generating wealth and having success. But if you know me, you know that I also talk about creating a rich life. And I think that we really need to share this before we talk about all the other stuff. That in order to continue to share all the ways to be successful and all the strategies that you can use to double down on your effort and have an incredible end of the year, I feel very responsible and I care about you, the human in you, not the founder in you or the investor in you, but the heart of you, the soul of you. And to that part of you, I want to touch on the dangers of destination addiction. I wrote about this in my book last year, and I thought that I coined the phrase because I had never heard the term before, but it might very well have been an American therapist, Dr. Robert Holden. And because we live in a world where people are so quick to take others' quotes, others' words, others' IP, we are committed here to doing the opposite. So I will assume that he said it first since he's older than I am, and I'm going to quote him here instead of me. Dr. Holden defined destination addiction as the chronic and often subconscious belief that happiness and fulfillment resides in some future achievement or some other event and not right here, right now in the present moment. It's the feeling or belief that I'll be happy when, or my life will be great when I achieve blank. You fill it in for you. A study published in the Journal of Psychology Today found that individuals with strong destination addiction tendencies tend to experience much higher level of stress and anxiety. And yet another came out, the Journal of Occupational Health Psychology, found that individuals who are overly focused on success are more likely to experience burnout, live in a state of physical and emotional exhaustion. You can probably see how being on this perpetual hamster wheel of striving and growing for success without ever experiencing contentment is problematic at the very least. When you lose focus of what you've built, what you have, what you've overcome, what you've already done to just get to this point because you're so focused on what's next, you're robbing yourself of the joy right now. You're robbing yourself of happiness right now. And science tells us, numerous brain studies by people far smarter than me, that the greatest dopamine is released during the process of us going after to achieve something new, to learn something new. It's not when you acquire the thing that you're after. So I just encourage you to do some self-reflection, to self-assess, to find out, could this be you? Are you binging and consuming information like this podcast, like this show, and you're trying to get more information to become more successful, to achieve this next thing? And if that is you, no shame, no guilt. We've all been there. Every ultra successful person I know has been caught up in this a time or two, including yours truly. So now the important part. How can you appreciate what is and aspire for more in a healthy way? Well, I'm so glad you asked. So we're going to unpack this. Number one, know that it's going to take a conscious effort. Just like it takes a conscious effort to go after your goals and to achieve something new, learning to appreciate the journey rather than solely fixating on the goal will take time. It's like anything else you want to do. Intentional focus, conscious commitment, create the habit. Number two, if you don't have a spiritual practice or a mindful practice, here's your sign. Meditation, deep breathing exercises, prayer, gratitude journaling can all be a great place to start to help you appreciate what's here and what's now. Number three, set balanced benchmarks. While setting ambitious goals is essential, make sure that you also set smaller, achievable milestones along the way. Celebrate those accomplishments, no matter how small. Reinforce that positive mindset and a winning mentality. And number four, remind yourself to embrace the journey. Who you become on your way to be successful is far more powerful than achieving what you think success is. If you learn to enjoy the process of growth, of learning, of self-improvement, rather than fixating on some specific outcome, you will be able to achieve even more than you can imagine. And this is just something from my heart to yours. So often I see people think of what's possible for their life. They think that this next thing is really what's going to make it for them. But I want to remind you that every single thing right now that you actually want is based off an old version of you. It's based off of your prior experiences. It's based off of some other person that you were 5, 10, 15 years ago. What you're able to accomplish in this lifetime is greater than you can even imagine right now. It's greater than your wildest imagination. Which is why if you can appreciate the journey while you're building something, you will be able to appreciate and achieve continuously throughout your lifetime without getting burnt out. Wealth, success, building a business is playing the long game. And I think it's important to talk about some of these things so that you can develop the muscle to enjoy now and aspire to be something more. It's not either or, it's an and. You can appreciate where you are and aspire to be something more. And that is, I think, the intersection of a really rich life. Which brings us to number 5. Seek support. Share your thoughts, your challenges with a mentor, a coach, a therapist. Sometimes talking about any type of addiction, whether it's this or something else, will bring valuable insights to life and can provide support to really help you understand it better and identify where maybe it stems from. Look, I'm not saying to not achieve, grow, or stretch. I am saying achieve, grow, stretch yourself, set goals, have big dreams, create a vision for your life. Just remember that true success, just like true wealth, is not solely defined by the external achievements only. It's in our ability to find happiness and fulfillment in our lives. By embracing mindfulness, by setting balanced goals, enjoying the journey, we can really break free from any chain of destination addiction and will ultimately lead us to have a more fulfilling life. Because success is not a destination. It is a way of being. Now, that actually wasn't the episode. That episode is just part of our series. I kind of got on a rant there. Now that it's done, maybe we should shift into probably what you tuned into, which is the next part of our real estate investing series. So it's kind of a hard transition, right? To go from something like that to what we're actually supposed to talk about. But when I was writing a lot of this episode for today, I just kept hearing that on my heart, and you guys know me well enough by now that if I feel something, I'm just going to share it because I feel that someone somewhere maybe needed to hear that. And so that's my hope and wish for you. All right. Let's get into why I think you might be tuning in today for the next part of this real estate investing series, as we talk a little bit about commercial real estate investing and ask the question, is there a threat of a commercial real estate market crash? Look, where we are right now, we already have a pretty fragile U.S. economy. So the fact that $1.5 trillion in commercial mortgage debt is due by the end of 2025 is not something to ignore. With increased borrowing costs, with tighter credit conditions, and with an overall decline in commercial property values due to various reasons like store closings and remote work, the risk of default has really increased. Now, Fitch Ratings estimated that 35%, roughly 5.8 billion of pulled security mortgages are coming due before December 2023 that will not be financed. Let me back that up. I want to say that one more time. 5.8 billion of pulled securities on commercial mortgages just before the end of this year will not be refinanced. Commercial real estate is melting down fast. That's not my quote. That's Elon Musk, who said on Twitter back in June. So what's really going to happen? It's projected that office and retail property valuations could plummet as much as 40% from their peak this year, as higher interest rates are making it far more difficult for investors to refinance. More than 50%, really take this in, more than 50% of the $2.9 trillion in commercial mortgages will need to be refinanced in the next 24 months. This is at the same time that new money is trading at more than 340 to 350, maybe it's 450 basis points. Like, that is massive. And when complicating the matter is the fact that the small and regional banks are the biggest source of credit to the $20 trillion market. And they hold about 80% of the sector's outstanding debt. The Federal Reserve has raised interest rates more than 10 times in just this past year. We were originally trading around 0. Now we're up around 5%. And everything's kind of saying that indications are pointing that there could very well be another hike this year. I mean, it's insane what's really going on and how hard it's been. But I want to talk about two stories that are very timely that just got released, depending on when you're watching this. But one is the fall of Rite Aid. After closing 100 of its underperforming stores just last year, this mega corporation is now set to close more than 25% of all of its stores. Now, that's like 500 nationwide. Although a group of the company's bondholders want to liquidate even more, that's still all up in the air. Rite Aid's stores have been unprofitable in the recent years. Rite Aid reported a financial loss in the first fiscal quarter that totaled $306 million in losses. And the expectations next year, it's going to be even worse than initially anticipated, with losses, I think, somewhere around 650 to 700 million. Now, the company is still in process of landing on a final number, so who knows what will end up happening at the end. But I think it's important to understand what's going on in the commercial sector and a lot of these corporations, what's happening. And that brings us to another very, very new story that just kind of was released all over the internet. And that is that Target has also announced it's closing not as many stores, obviously, but just 9 stores in major cities across the country for a different reason. They're saying violence, theft, and organized crime. The company will close 1 store in New York City, 2 in Seattle, 3 in San Francisco, and 3 more in Portland. Now, they reported their fiscal second quarter earnings report in May, and the Target CEO said that organized retail crime has shot up at all stores, which, if you're watching the news, you can see it everywhere, and that this added to their overall shrink, which is expected to reduce Target's full-year profitability. Their full-year profitability by more than $500 million compared to just 1 year ago. $500 million more in theft. So what do you think about all of this? You see the videos of thieves ransacking stores and stealing everything that they can get their hands on. Do you think closing the stores is the answer? You know, what does all of this change in the commercial real estate world? What's currently happening? What's yet to come? And what does that really mean to you? Maybe nothing, but maybe everything. If you have a sustainable business with a physical location and a commercial footprint, or you have an online business, have you ever considered or identified about having a physical component to your business and how that can add brand credibility and increase market share, customer expansion, or additional advertising? Maybe you could be looking at leveraging this market volatility as an opportunity to buy buildings and expand your reach for a lot less. Now, why is commercial real estate, CRE is the acronym, attractive? Personally, I love it. Here's a few reasons why. Number one, potential for high returns. Commercial properties often offer the potential for a higher rental income and appreciation compared to residential. Number two, steady cash flow. Typically, commercial leases have longer terms and better terms than residential leases, which gives you greater cash flow and more stability. Number three, the tenants. Commercial tenants are typically businesses and business owners which tend to be more responsible, more professional in their dealings compared to individual tenants. And of course, this is generally speaking. Number four, triple net leases. In some cases, tenants are responsible for the property tax, the insurance, the maintenance costs of the building, which all reduce your monthly expenses. Five, tax benefits. Commercial real estate investors can take advantage of various tax benefits, including depreciation deductions and the 1031 exchanges. Six, appreciation. Commercial properties in prime locations can appreciate significantly over time, potentially providing pretty substantial capital gains. Now, with every pro, there's always a con. Just like we talked about short-term and long-term real estate investing, there is obviously pros and cons to commercial investing. So let's just cover some of the not so great things about commercial real estate investing should you want to get into it or expand. Number one, you're going to have a higher upfront investment. Typically, commercial properties often require a larger upfront investment compared to a residential real estate property. Number two, higher risk. Economic downturns can happen and they will impact businesses, which could potentially lead to vacancy rates or potential income loss. Look at all the stuff I just covered in the beginning. If you own some of those commercial properties and Rite Aid or Target or somebody else is moving out, that could actually take a hit in your pocketbook. Number three, complexity. Managing commercial properties can be more complex. They can be more time-consuming depending on your management company. They can involve more lease negotiations and tenant relationships and additional property maintenance. Like if you live on the East Coast or in the Midwest, you're dealing with a lot of snow removal and landscaping, so you might have a little additional property maintenance fees. And number four, I would say, is market sensitivity. The commercial real estate market can be sensitive to outside economic cycles and local market conditions, which would make it more volatile. And of course, you've got regulatory compliance. Commercial properties are typically subject to far more complex zoning and requirements than a residential property, which will increase the burden on you. And then, of course, liquidity. Right? That's always a challenge depending on what type of vehicle you're in for real estate investments. But commercial properties are generally less liquid than a stock or a bond. And selling a commercial property, especially in the landscape that we're in, can take a far longer time than selling a residential property. And last, they can be capital intensive. Depending on how your lease is structured or how your maintenance and improvements are, commercial properties can be pretty expensive, which might require additional capital. Before investing in real estate, commercial or residential, it's crucial to do your research, consider your risk tolerance, and ultimately your investment goals. Additionally, real estate markets can significantly vary by location. So what might be a pro in one area might be a con in another market. So always make sure that you really do your due diligence. My top two pieces of advice when it comes to commercial real estate would be this: location, location, location. Location of the property is paramount. It may be very well why we're seeing Rite Aid stores close while Walgreens is surging. Walgreens does something very uniquely different. They will only put their buildings on certain lots of lands that have to be on a corner or by a red light or in a really high trafficked area. They will only take A+ locations. Don't know if that's all the reason why Rite Aid isn't doing well and Walgreens is really dominating the market, but it's always something to consider. Remember number two, plan your exit strategy from the onset of the acquisition. Consider how this property works for you and your financial goals. Do you intend to hold the property long term? Do you tend to sell it for capital gains? Do you want to explore other options like the 1031 exchange or just get tax benefits? With business or investing, it is always the best time to plan the exit at the beginning of the acquisition. Now, with any investment, it's critical. Do your research. Seek professional advice from financial pros and trusted real estate professionals, and obviously legal experts as well. You can make the informed decisions when you have this information that will align with your investment goals and aligns with your risk tolerance. All right, guys, that's all for today's episode on commercial real estate investing and whatever the beginning of the episode was, but whatever it was, I hope you enjoyed it. Just thank you so much for tuning in with me, spending this time. Be sure to like, subscribe, whatever you see down below, do it so that we can get this out into more hands, more ears, more eyeballs in the world. Leave a question. I'd love to hear it. And until next time, keep investing, keep building that business, and make sure that you are building a rich life. We'll see you soon.